Okay, good afternoon, everyone. And let's give 2 more minutes for others also to join, and then we'll kick on from there. Okay, so before we start, until others join, shall we have a small discussion since this is our first day of our tax class? And to most of the students, the taxation will be new, isn't it? So when it comes to taxation, unlike your financial statements or the financial perspectives or the objectives, what you have learned so far, compared to the tax knowledge is little different. So if I say, if you take your financial knowledge, it is like a swimming pool because you have your framework to work, swim around. But when it comes to tax, I will not say it is ocean. I would also call it as a lake. Okay, lake also have its own boundaries, but you have some preset standards where you need to have a cut. Okay, all. Okay, let's start. Okay, guys, welcome back to tax again. So when you hear the word tax, what comes into your mind? I always ask these questions from students. Be very practical. Don't set your mindset, okay, I don't know this subject, I don't know this part. If you have a mindset like that, we can go and grow. It's very important. Whatever the subjects that you choose in your skills level, first you need to understand, I know this subject already. You have to have that predetermined mindset to learn things because already you are in the commerce field. Okay, so you know all these wordings. So when I say the word taxation, what comes into your mind? Good. Now she's saying that what we need to pay to the government. So you have an idea, something it's related to the government, isn't it? So now can I ask a question? What is government? What comes into your mind? What is the definition that you get in your mind? The body which runs the nation. Good answer. Now when it comes to government, government is going to control the entire economy, isn't it? So if you take your own house, so there is a prescribed way of managing your affairs at home, isn't it? So you can work, your dad can work, isn't it? Your mom can work. Sometimes she might be idle. And then you pull all your resources. When I say resources, in terms of finance. So you might be thinking, okay, these are my costs for these items. For an example, groceries, I need to spend around 10,000. Okay, electricity bills I need to pay. Then all your utilities you will be concerning, and you will draw all your expenses. So when you draw all your expenses, then you know that you need income. So that is the main strategy, the main problem, the main risk you will face. Where to search this money? So now you will be working, you try to do a business, you seek certain ways to find your revenue somewhere. Okay. So the objectives would differ. Why you are earning this money? Sometimes I can have a work to pay only my lease rentals. Alternatively, I can run a company, okay, get that income and invest somewhere else. Now see, you're drawing your plans. What and how am I going to manage my expenses? So now the same situation the government of the country will also face. The country who is having a better system will have better living standards. Okay, isn't it? Simple example, take Dubai. How about their living standards? It's well organized, isn't it? Now, technically, if you visit there, what happens is automatically you adapt yourself to that particular country's regulations. Why? That the way you eat, the way you dress, the way you speak to people, everything automatically changes. So everything is ultimately decided by the government of the country. So taxation is an important aspect to any country, any economy. If you have a better taxation system, trust me, your economy is going to boost. Now we should know what is taxation. Now taxation is a huge topic where government decides how to find their money to run the economy. Is printing money is a solution? Printing money is not a solution. You know what happened to Sri Lanka, right? 3 years back. When you print more money, what happens to the economy? The value of your goods and services increases. You call it as inflation. You are inflating yourself. So when you massively print money, it's like your own parent is raping you. That's the statement that they used to say, because that's so severe. See, a parent is having such an action means it is so severe. So now you have to sit in a position and think how we are going to manage this problem, how we are going to address this situation. So you need to put a system. Okay, I'll take you all to the chapters because I'm giving you the background factors how you need to think. Because when you go to the exams, in exams questions, whatever they are in the theory will be 20 to 30%. Trust me, it is going to be 20 to 30%. Now in skills level, you have to improve your skills and understand how you are going to implement those skills and how you are going to abolish new skills if you are facing such a situation, isn't it? So this preset criteria needs to be adopted from the day one itself. Okay, right. So before I move into the chapters, I would like to talk about what we are going to face. Now, these are the contents that we are going to discuss in our syllabus. So in your syllabus, these are the chapters that we are going to discuss. First, we should understand and introduce ourselves to the taxation syllabus. And what taxation in particular we are going to talk about? Which countries? UK. So any questions that you need to practice needs to be UK variant. What variant? UK variant. Because in taxation, when it comes to ACCA syllabus, you have different variants. So don't confuse. You might study some law here, and when you try to apply their rates, their ratios, their percentages might differ, and their standards will differ. Okay, so you need to choose what variant? UK variant. That's the first thing that you need to be aware of, and you should know what you are going to learn, isn't it? You would receive these taxation contents from the LMS portal. Download it. Okay, you know what is LMS portal, right? Okay, your learning management platform. So download it, take a print out it, paste it in your study room. It's very important. Now if you have maintaining a file cover, paste it. Okay, then I have given a column for status. Each and every time I complete one chapter, put a tick, put tick or cross, it all up to you. Then once you revised it, put a cross. So now you are aware that you are well organized. Okay, I have referred this chapter. So sir has completed in the class. So we have to be very transparent where we are standing. You got it? And then you cross it, then you know that you have learned that chapter. Is that all? No. So now you need to test yourself how well you have understood this chapter, isn't it? Otherwise, no point, right? It's not a matter of reading those informations. you need to put yourself into trouble. How you're going to put yourself into trouble? By doing questions. No worries. I will arrange separate sessions. Now, how am I going to organize your classes? We are going to take separate time and practice more questions, because taxation involves more calculations and you need to remember certain facts. You can't memorize it always. How we are going to keep it in mind? By practicing. So we need some extra hours for practice. Before that, we should have the knowledge to practice. So first few classes will be working on through the knowledge, and we'll be doing activities here and there. Then I will adapt you all to the CBE platform. I'll push you down to the CBE platform to practice questions. Every one of you are having a laptop at home. How many of you are having a laptop? Online, guys, I hope everyone is having a laptop. If you don't have, at least have a desktop. It's very important. Otherwise, you will lose time management in your exam. The next thing is, do the questions from the laptop itself. You need to practice it in the lab. I don't advise students to get the exam kit and draw lines here and there and practice it there. It's okay to practice, but better thing, get the PDF version and do it. Mark it, highlight it, read it, adapt to that. I don't want to say all these things at the last of the class, because most of them are doing, or they are trying to introduce themselves at the last. So before I go into your chapters, what I'm trying to say is how we are going to prepare ourselves for this paper. End of the day, myself and yourself, what we are trying to do, we need to get through this paper. So now you need to look how well we can prepare ourselves to get through this paper. It is important. Okay, right. And the next thing is, I will have a session where you need to bring in your suggestions. Now, since we are studying virtually, you don't have an ability to study group. So when I was doing my studies, we had the group studies, effective group studies. Okay. Now you are in the skills level, you know the heavy and the weight of the subject and your qualification that you are bearing. So I don't want to stress more things about how you need to do a group study. So that group study knowledge and knowledge sharing, the peer learning, is missing when you are virtually connected. So we'll have a suggestion session. So I did this. Now I might be doing a question. I can take some formulas and do it. You would have a better suggestion, isn't it? You can tell, so I got this answer in this way. Isn't it working? If it is the best thing to do, then we'll share it. So, and you should understand, it can be my subject or any lecturer's subject. If you find an easy way, convey to them. Discuss with them. Okay, it's not you are trying to be outsmart. You are helping everyone, because every one of you should get through this exam. That's the ultimate target, in an easy way as possible. Right. So you're marking those things. And now see, from chapter 1 to chapter 15, I have highlighted in a separate frame. So all these chapters will be interconnected, which means examiner can mix chapter 4 with chapter 1, chapter 5 with chapter 15. So he can ask you questions from those areas, because it is where you are going to study about income tax. Now there are types of taxes that we are going to learn. Okay, I'll teach all those types of taxes. Now from 1 to 15, it will be focusing on what tax? Income tax, which means more than 50% of your syllabus is focusing where? Income tax. So it is very high chance that in the section C, you will get an income tax full form question for 15 marks. I'll show the exam format as well. Okay, so first 15 chapters are important. Right. Next, you will be talking about the corporation tax. What is corporation tax? The taxes which are charged on companies. Now, as an individual, what is the tax that I need to face will be described under first 15 chapters. As a company, what sort of taxes that is applicable for a company will be described under 16 to 20. Then you have something called inheritance tax. Let's see what is inheritance tax. And value added tax. On top of that, we have something called capital gain tax and national insurance contributions. All those things we will discuss slowly when we go along with each chapters. Okay. So now you have an idea what we are going to discuss. So throughout our syllabus, you are going to learn about income tax. What is income tax? As an individual, now there are certain thresholds. You know what is the meaning of threshold? Some limits. Now, if I'm earning 1,000, so is it fair to government to tax on me? Same average individual, he's earning 100,000. Is it fair to government tax on him? Now you need to understand from whom the tax will be collected. Now, having an individual, as an individual, if I possess more wealth, then I need to pay taxes. That will be directly charged from what I own. That is income tax. As an individual, I need to pay. Then as an individual, you will hold on to many things. You will have properties. You will have investments. Okay. So you will do an employment. So there are several ways you will earn money. Now, at the start, I told you, right? To function your daily expenses at your home, you will be looking for the ways where you can get revenues from by working or by doing businesses. So as an individual, we will be engaged in revenue activities. So now government will adapt a system how it can be taken away from you. Why they are doing, I'll discuss it later. Okay. And you might be wondering, I'm investing all my hard work, and why government is taking money out of me? Now, without taking money out of you, a system can't run. Okay, just have those ideas just running behind. We'll give reasons to these ideas later. I'm not going to attach any reasons because we have to discuss it separately. Right. So once you discuss all these chapters, then we are sound enough what is happening in the taxation syllabus. So your taxation syllabus is framework to income tax, corporation tax, inheritance tax, value added tax, capital gain tax, and national insurance contributions. We learn each and everything individually. Okay, because you have to remember certain criterias. Okay. And when you're learning this subject, you need to think as a tax consultant, not just as an accountant. Who are you all? You all are tax consultant. So consultant means what? You should be able to advise someone. So to advise someone, you should have the knowledge to advise. If I'm coming out with a problem, you should know what sort of the treatments that I need to give this person. Headache means you should know this is the treatment. Leg pains means you should know what is the treatment. So you can't give the same treatment that you're giving to the headache to the guy who is coming out with leg pains. Got it? So you need to understand where I need to apply this. Okay, I'm just setting up the tone. Okay, then most important fact. So your examination paper or the taxation paper will be tested from the Finance Act 2023. So every year they will revise this. So now the Finance Act in UK 2023 is applicable for your examination. So this examination is valid till December and March. This will apply for December and March exams. So every year the tax regulations will be revised. Now say in Sri Lanka, the new president came. Now tax laws will be different. You need to rework everything. Whatever your previous president had will be changed, will be amended. Certain things will be continued as it is, but there are certain things that he will change. So likewise, your statute will change these regulations and laws regarding to the tax every year in UK. So we have to keep an eye on that as well. It's very important. Okay, right. Then your examination is concerned with 3 sections. How many sections? 3 sections. Part A, B, and C. So in part A or section A, you will get 15 objective test questions. Okay, so they have given some notes. Let's read it. Now see, the section A and B, both section A and B can be drawn from any area of the syllabus. So I showed you 22 chapters, right? So you can get questions from any areas. 100% of your syllabus will be tested in section A and B. I can precisely say this is what examiner is going to test. This is what examiner is testing mostly. But because you can't do a past paper analysis also, because it's a CBE platform exam, the questions will be jumbled. The questions I get is not the question that your next person is going to get. So obviously we can't predict it. So no room for prediction. But what is the prediction that we have to make? Entire syllabus will be tested from A and B. You got it? Right. Then in section A, they will give you 15 questions. Each will carry 2 marks. So you will get 30 marks in total. Section B, you got 3 objective test questions. So actually they will give you a scenario. Due to that scenario, they will draw some questions and they will ask you the questions in related to that scenario technically. So then it carries 10 marks each question. So in total, you will get another 30 marks there. Now see, if you do well in your section A and B, you can get through your exams because you are scoring 60% of your marks there. Then in the section 3, your 40% of your marks is sitting. Section C. So you got one 10-mark question and 2 15-mark questions. Did you understand that? One 10-mark question and 2 15-mark questions. So now when it comes to your section B, now they are telling that each question is a case study. I told you, right? They will give you a case, and from that question, from that case, they will ask some questions like your comprehensive parts. Okay. So they will say a case of this person. So he is an individual. So he's earning so much of wealth and income from these sources. So if you are preparing a self-tax assessment for him, how much he is liable to the tax authority, what are his deductions, what are his allowances. So they can ask and adapt some questions through those cases. Okay. Section C, it is constructed response questions. So you have a 10 marker. So that can be drawn from, yet again, any area of the syllabus. You got it? Now see, section A, B, any area of your syllabus, as well as in section C, the 10-mark question can be also tested from any area of the syllabus. That depends on examiner's mood. Okay. So your 70% of your marks is 100% of your syllabus. Did you understand that? So technically, what is the next step you need to understand? To pass this examination, I need to know the entire syllabus. You can't skip anything, knowingly or unknowingly. But still, there is another escape. Let's see. The strategies to face this paper, I'll tell it later because I don't want to tell it now. So because you will be focusing only those things. Right, coming back. Now you got two 15-mark questions, right? One will be focusing on the income tax, other will be focusing on the corporation tax. So you should be able to draw an assessment to corporation tax, and you should be able to draw an assessment to income tax. So income tax, how many chapters were there? There were around 15 chapters that we need to know. So many things that you need to discuss, more than 50% of your syllabus. So it's going to be a massive task for us. But don't get fear, I'm not scaring you because I'm addressing these things now. Then we can make our plans. So we need to work out our plans from the day one. Otherwise, if I tell you these things at the last minute, then when you are trying to make your plans, it's too late. So now we have to practice the plan A and see does it works for me. If it is not working, then we need to go for another plan. So individually, you and I have to sit and do this. Then only we can get through this subject. Unlike other subjects, when you fail in this subject, it's a disaster. Why it's a disaster? The Financial Act is getting revised. Then you need to revise all your learnings. The computations and the methods will be the same, but certain facts will change. Some years certain deductions are allowed. Some years certain deductions are not allowed. So if you have learned Finance Act 2023 and going to sit for the exam Finance Act 2024, it's a big risk you are taking. You got it? But still, no worries. It won't be a massive change. But to be honest, in Finance Act 2023, they had massive changes. If you practice any papers in Finance Act 2022, it is not related to the questions that you're going to say. So that's why in practicing some past paper questions also a problematic situation. So taxation is a challenging subject, but it is not a difficult subject because examiner already given this is what I will ask. So he can't go out of the box. Can you change the law? You can't change. Because these things are already decided by the government. And they will say, from an individual, these are the incomes you are going to tax. Then those are the incomes you should know that is being taxed. These are the incomes which is not taxed. So you know these are the incomes which is not taxed already. So if you come across those situations, include and exclude. And now we have to adapt to that situation. Okay. Am I clear to you where we are heading? Because this preparation is important. You should go home, sit and have a nice plan each and every day after the class. It's important because I'm going to meet every 7 days, right? So if I meet today, I will meet you in the next class is next Sunday, isn't it? So we have 6 days of gap. During that 6 days of gap, you have to make sure you go and draw your plans. It is important, right? So then your pass mark for this examination is 50% as always. So you know your target. I need to hit 50%. So what are the strategies that I have to invest? What are the strategies that I have to inculcate from the classes? And what are the suggestions that I'm going to bring into the taxation class and make everyone's life easy? It's not me dictating from this position. If I dictate you, then what happens in skills level is you will not be able to answer any questions which is new. Your mindset will be always trained. Sir told this, sir told this. This is what I need to do. This is what I need to do. You should be never in that comfort zone. You got it? So we are going to do it individually. So now let's move into the chapter. So far, any concerns that you all have? So I made you all aware the syllabus, what we are going to learn. And you know, more than 50% of your syllabus is from the income tax. Then the next favored area is corporation tax. Now don't give self-prominent to each of these chapters. Every chapter is equally important because 70% of our marks is 100% of our syllabus. Only 30% of our marks is distributed between income tax and corporation tax. You got it? But technically, when you learn the 100%, this 30% is automatically earned. So you can win prizes easily because we know the scope, what we are going to do. Right. So when it comes to taxation, we are going to discuss this taxation system of UK. Okay. So the main objective of a taxation system is what? Funding the government expenditure. I told you, right? You have your expenses. To spend, you need money. Now, what are the expenditures of the government? What are the expenditures of the government? Subsidizing, okay. It's a good answer. Subsidizing can be any, you can subsidize anyone. It can be farmers, it can be business owners or anyone. What else do you think? Now, do you need an infrastructure to a country? Do you need a defense force for a country? Do you need ports for a country? Now, who will take in charge of all this? Government. If you give the responsibility of these main implementations, then your country is at risk, isn't it? Because these are the main entry points for other people to take charge over you. So technically, when government comes into play, they are trying to control the main impacts and systems of the country. Now, without a proper transportation system, can you conduct your businesses? Can you locate yourself here and there? No. It will be very difficult. Now, if you don't have a proper communication system, think what will happen to the country. So to bring sound systems in place, government needs funds. Where government is going to get funds? From us. Because I'm going to earn from the resources which is available for me in Sri Lanka. Then Sri Lankan government has the right to tax on me. It is the rent that they are getting for the resources that I'm employing. Why they are taking? They're telling the objective. The main objective is to spend for government expenditures. So government expenditures are what? So government expenditure is classified into many areas, but I'm not going to go that deep here. So as a government, they need to give us good transportation system, good communication system, better logistics, better security. So when I say security, it's what? Defense. Okay. So you need to make sure that government has sufficient fund to give this service to the public. You got it? So now you are getting the reason why government is taking money from your wealth, right? Is it fair now? No. Think from a fair perspective, because what we are going to learn in taxation is how can government fairly take your revenue? Because there are certain situations where government is not fair. Okay, so they are taking money unfairly. Sometimes certain laws will be favoring me, but not you. So then it is a loophole of the system, because I'm paying the taxes happily and you're paying the taxes unhappily. So there can be contradictions like this. That's why every year the taxation concerns are revised. You got it? Okay. And then they are telling that in order to drive your economy, this is the main tool. So taxation is the main income source for a government to run their economy. You got it? Right. Now, we are going to introduce ourselves. Now, chapter 1 is going to introduce the taxation system in UK, where it is technically similar to all the other countries. Okay, even if you take Sri Lanka, this is the way. UK, this is the way. Then Australia, this is the way. Okay, right. So when it comes to taxes, government has two branches to collect these taxes. One way is directly getting the tax from you. The other way is indirectly. You don't know that you had paid tax, but you are contributing to the government's revenue. Can I call it as government's revenue now? Right. What is government's revenue? The tax money that they are collecting. Right. So direct taxes. What do you mean by direct taxes? The taxes which are charged on your income. The taxes which are charged on your income and properties. Got it? Directly. So if you own some wealth, government is directly taking money out of it. So from you will feel that you're paying tax. In an income tax, the taxpayer will feel that he is contributing to the taxes. In an indirect tax, you don't feel that you're contributing to the tax. Now you should know some examples, isn't it? So what are the direct tax examples? Almost 90% of your syllabus is direct tax. Why? Income tax. Do you feel it or not? Are you making money? Government is asking money from you now. Or you feel that? It's a pain, it's a burden for you, yet again. Capital gain tax. What do you mean by capital gain tax? Assets. The assets that you own, government is charging a tax. Do you feel the pain? Yes. Inheritance tax. These are the gifts from your inherited properties that let's assume we'll go to inheritance tax in detail. Now let's assume your ancestor or your great grandfather is giving you an antique property. So if it is valuable, that will be taxed in you. So we'll see those laws and regulations behind that, but in detail. At the moment, still you will feel, right? Now, you are owning this property because your grandfather gave it. But still you need to pay a tax on that. Do you feel the pain? Yes. If you are feeling the pain, that's a direct tax. Corporation tax. The taxes which are charged on the incomes of the company. Now, when you are drawing your financial statements, right after net profit, what is the next adjustment? Tax, right? How many of you have done FR? What do you calculate after net profits? After operating profits, you calculate taxes. Then you decide profit before interest and tax, profit after tax, and everything. So tax is a burden, right? You feel the pain, isn't it? Now your business is earning 100,000, 30,000 is given to the government. You got it? So if you feel the pain, that is a direct tax. Right. Indirect tax means you don't feel that you're paying it out. Okay. How? These taxes are charged on goods and services. Now, for an example, you go to a restaurant. You order the meal. So once you're paying the bill, and once you receive the bill only, you are aware that, okay, this amount of tax is being charged on this. You got it? So government will collect those taxes by charging or attaching it to something else. So if government is attaching it to something else, that will be an indirect tax. You will come to know that you have paid tax only when you receive the bill, isn't it? So indirect taxes, you don't feel that you have paid the tax. But the direct tax, you will feel, you need to compute, you need to calculate and pay it. Indirect tax, you don't want to do computations, but you need to file some returns. We'll discuss all those things later because that is your last chapter. Did you understand that? So income tax, corporation tax, capital gain tax. What are the other taxes? Inheritance tax and value added tax. In some countries, they call it as goods and services tax. They call it as GST. So in countries like Australia, they call it as GST. Same thing. Okay. So it depends on country how they are calling it as. In UK, they call it as value added taxes. So no worries, wherever you work, which accounting platform you work, the taxation rules going to be similar. Right. Did you understand what is direct tax and indirect taxes? Is it enough to know all these things? No. Still, we didn't go to the major thing. I'm just introducing you all to the syllabus. In taxation system, there are two branches: direct revenue and indirect revenue. For whom? To the government. So direct revenue will have a pain for you when you're paying it out. Indirect revenue, you won't feel the pain. Okay. Right. Next. So now you need to understand the wording capital and revenue taxes. Now, examiner can use these terms. So in the previous slide, we learned something called direct and indirect. Did you understand what are direct taxes and indirect taxes? Now you need to understand what do you mean by capital taxes and revenue taxes. So capital taxes means the taxes which are charged on assets owned rather than earned. Did you understand that? What they're trying to say? It is a tax which is imposed on the assets that is owned by you, not something earned by you. So capital tax is your properties. For an example, if you ask whose laptop is this? So there should be an owner for this laptop, isn't it? So this laptop is owned by PPI. So it is the assets of PPI. This property, this building is under whose name? Those are capital taxes. The taxes which are charged on the assets, technically, which is owned, are considered as capital taxes. Revenue taxes means the taxes which are charged on income and profits. Now we need to have a better understanding in these two terms, right? So let's understand this through this. Okay. Now, so you know the examples of taxes now, the types of taxes, isn't it? What are the types of taxes you know? Income tax. Then you know corporation tax. You know inheritance tax. You know value added tax and national insurance contributions. Now, in our previous two slides, we discussed about direct and indirect taxes. Then in the next slide, we discussed about capital and revenue taxes. Now let's put ourselves and see how we are going to describe and differentiate these taxes, right? So when it comes to income tax, what do you mean by income tax? The taxes which are charged on your income. How are you making your income? When you are employed, you are making your income. What do you mean by employed? You're working for a company. You're working with someone. You are doing a job. Do you receive money? Yes. Do you pay taxes on that? Yes. Now in Sri Lanka, not only that systems are getting adopted. In Sri Lanka, if you are earning more than 100,000, from 100,000 as an employee, if you're earning more than 100,000, then you need to pay something called APIT. Okay, you need to make a taxation payment to the government. Country to country, they call it in a different way. Sometimes they call it as pay as you earn. Okay, no worries, we will get introduced to all those terms later. But technically, an income tax will be charged on the employed income. Then self-employed income. What do you mean by self-employed? You're being a contractor. What's the difference between employment and self-employment? That is very important. How many of you have done law? No one? You have done law. Then you should know the definition of employment and self-employed. Employment means contract of services or contract for services. It's a good question, right? For services, right? Technically, if you are working for someone and your NIC, national insurance contributions, are paid by the employer. Who is the employer? The business. If business is contributing your insurance payments, NIC is your national insurance contributions. In other terms, in Sri Lankan terms, if I say your EPF and ETF. So whoever is paying your EPF and ETF, okay, if the company is bearing, then you are not self-employed, you are employed to that company. Small example to understand. Self-employed means you're bearing your own EPFs and ETFs or your taxes. So if you're working with me, if you are employed means from your salary, I will deduct the, now let's assume I'm paying you 150,000. So in terms of the salary that I'm paying you 150,000, according to Sri Lankan tax laws, I need to deduct the taxation amount from your income. So let's assume it is 10,000. So how much I will pay you? 140,000. So you will receive in your bank account only 140,000. But in the second situation, there is another contractor who is working with me. For him, I'm paying 150,000. So for him, did I deduct the taxation payments to him? No. So then he is self-employed. So whoever is paying their taxes alone will be considered as self-employed. If someone else is bearing your taxes, then you are employed. Did you understand that? That is very important, because in the examination case studies, they can confuse you. Then what are the ways you can make money? Investment. So when you invest, you get returns, isn't it? Let's assume I'm investing on shares. So I get dividend income, isn't it? I invest on a business, I get profits. I start up a partnership business, I get profits. So these are investment incomes. So all these things will be categorized as income tax. That's why sole traderships and partnerships, do they pay taxes? Is it compulsory to pay taxes? You learn, right? Taxation is not compulsory. Why? Because it is taxed according to that per individual. So it will be taxed as income tax. It will be taxed as what? Income tax. We will learn. So under our income tax chapters, now see, unincorporated traders and partnerships are the chapters which is falling under what? Income tax area. You got it? You should know these links to study, okay? It's very important, right? So now you know what is income tax, isn't it? If you ask me, sir, whether it is a direct or indirect tax, it is a direct tax. Do you feel the pain? Yes. If you ask me, is it capital or revenue? Is it something that you own or you earn? You earn. So if you're earning means revenue. Earning means revenue. Owning means capital. Did you understand that? So if I take income tax, I told you your employed income, self-employed income, and your investment incomes are your personal incomes. That's how you earn money, right? What are the other ways of you can earn money? There are other ways that you can: donations, gifts, that will be charged under inheritance tax. You got it? Will it be falling under income tax? No. Now you have to be very careful. So now, what are the ways an individual can make money? When you're employed, when you're working with someone, you make money. When you are contracting services for someone, now who will contract a service? When you're being an expert, freelancers, contractors, in your terms, if I want to explain you, because you will say, I will do all these tasks, I'm an expert in this field, okay, so this is my charges for you. So you are a freelancer, so you are a self-employed person. Then if you have extra money, you will go and invest on other properties and things. Now returns that you get from there are earned income, not owned income. So in classifying between direct and indirect, you know what is a direct income means? You will feel the pain when you're paying taxes, okay? Then if it is capital or revenue, these are not owned ones, these are earned ones, right? Then corporation tax. So taxes which are paid on profits and gains of companies. On what? Companies. Is it direct or indirect? Is it direct income or indirect income? It's direct income, because from your profit you pay taxes, so you are aware that you are paying taxes. Is it capital or revenue? There are certain things you will earn, there are certain things you will own. Assets. For an example, if I'm running a business, I'm having, let's assume I'm running an apparel industry. So I buy some Juki machines. What am I going to sell? Apparels. So my earning or my revenue is going to be selling clothing, isn't it? Apparel products. So my income statement will be prepared based on those items that you sell. Are you selling your machines? But the machine is owned by the business. Machine is owned by the company. It is not your what? It is not your revenue item. Now it's very simple. What you take into your P&L? Incomes and expenses. Incomes means revenue. So the things that you earn from your income statement is your revenue, income. Things that you see in your balance sheet is capital items. So that is owned. So are you selling the machine in the market? No. You are using the machine for your production. That generates you income, but machine is owned by you. So it's an owned property. So when it comes to corporation tax, you can find certain items as revenue, certain items as capital. That is what it means. Both means there are certain items you can classify it as revenue items, and certain items it are classified as what? Capital items. Right. Then capital gain tax. What is capital gain tax? CGT. Short form for capital gain tax is what? CGT. Chargeable gains from sale or gift of assets. So these taxes are charged on what? Assets. Whatever the assets I own. Let's assume I'm owning 5 cars. So I have how many? Am I supposed to pay taxes on this? Yes. Is it an earned income or owned income? Owned. Owned means capital or revenue? Capital. Is it direct or indirect? Direct. Did you understand that? Right. Then inheritance tax. The next part is what? Inheritance tax. So when it comes to inheritance tax, these are the capital transfers in form of gifts or result of death. What do you mean by that? For an example, let's assume your grandpa is telling that the next, let's assume I own 5 cars. So I'm telling that I'm going to transfer these three of my cars to my first son. Got it? So now the first son is receiving this capital freely. Now think from government point of view. All these years I was paying taxes for 5 cars. Now actually I'm owning only how many cars? 2 cars. Will I pay taxes for all those 5 cars again? No. Technically I'm owning only 2 cars. So government is losing their revenue from, isn't it? So if that is the case, everyone can gift and donate, isn't it? When you gift and donate, if there is a criteria that gifts and donations are not taxed, then the taxation system, people can use the taxation laws for their benefit, isn't it? So now what happens? Government introduced another taxation system called inherited taxes. What tax? Inherited taxes. So inherited taxes means these are the transfers of gifts as a result of a transfer as a gift or death. For an example, I will say this property, this building is owned by my daughter after my death, isn't it? So now who needs to pay taxes? You can't say the taxes should be paid by my dad. No, he's no more, so I'm not responsible. Yes, it's his property. No, it will be changed to your name and you need to pay taxes now, because the person who is owning the property needs to pay taxes. Is it fair? It's fair, right? So now what happens is, now let's assume I'm coming back to my previous example. I owned 5 cars. So I donated 3 or gifted 3 to my first son. So now this 3 will be taxed under inherited tax to my first son. For me, it will be taxed under capital gain tax. You got it? Because it was my own asset. Then for my son, it is inherited asset. So he will be charged under the laws of inherited tax. I will be charged under the law of capital gain tax. Did you understand that? Did you understand the logic of inheritance now? Cool. Then next is value added tax. First, we'll identify what are these taxes. It's very important. Value added taxes means the taxes which are charged on the goods and services. The taxes which are charged on goods and services. Is that direct or indirect? It is indirect. The only indirect source of tax is what? Value added taxes. Then, is it capital or revenue? Are you owning anything there? Are you making anything there? No, it's nothing. It's neither. It's neither capital or revenue. Understood? Right. Then national insurance contribution. No worries. This is a separate chapter. I will address in detail what are these things. So, earnings of employment, it will be taxed according to class 1 NIC. NIC means what? Not national identity card. This national insurance contributions. Okay. Then profits of self-employment. Now, this is your EPF and ETFs. So, then business employers on employee earnings and benefits, that is class 1 and 1A NIC. Now let's see what are these class 1, class 1A, 1B. These are some tax codes that government used to refer. So employment income means class 1. Okay, so any earnings that you are getting from employment, which means when you are working for a company, whatever the money that you get, and if you are charging a percentage for NIC contributions, I'll say what are NIC contribution. That charge is called as class 1. Okay. Then profits of self-employment will be classed as class 2 and 4. No worries. We have to go in detail now. This is just an introduction. Just remember these classes and we'll learn it later. So these NIC is your direct source of revenue to the government, and it is a revenue type. You're going to earn money out of it. You have invested. Now what happens with your EPF and ETFs? Government will take this money, they will invest on projects or anything, on businesses, and they will make money out of it, isn't it? So from that money you will get your interest portion, and now let's assume every year I'm making 1,000 to the NIC contributions. Government will have a percentage. From your salary, 10% needs to be allocated. If I'm earning 100,000, then 10,000 is going to be kept under my pension scheme. For private sector employees, EPF and ETFs are the pension schemes, isn't it? So here I can't use the word EPF and ETF because we are not going to come across EPF and ETF. Rather, we are going to call it as NIC. Okay. So just to make you all comfortable in that area. So now, can I make additional contributions to it? Can no can't. Government is asking you minimum 10%. So can you additionally contribute? You can. You can ask your employer to make 20%, 50%, which means you are saving your money for the future. It's like you are investing in the bank. Kind of a fixed deposit. So later, now who is taking this money? The government. Government will manage this money. They will multiply this money and give you benefits. On this also there will be taxes. So that tax is direct tax, isn't it? Otherwise, what you will do is all these NIC contributions, let's assume I'm earning 100,000. For 100,000, if you charge 10% means 10,000 worth of taxes that you need to pay to the government. I'm telling my employer, you pay me 50,000. 50,000 put it to NIC. That is not taxed there. So now only on 50,000 you will pay a tax. So 50,000's 10% is how much? Only 5,000. And you will try to avoid taxes on the next 50,000. Now that is a loophole, right? That's why government comes in another angle to tax those money. Now did you understand that? Now any money, now as a tax accountant, then you can avoid taxes legally, but you can't evade taxes. We'll study what are evasion and avoidance. Avoidance is not a crime because in accordance with the law, you are doing things perfect. Now see, if government does not have a system to tax that 50,000 that I'm saving under pension scheme, then you will pay less tax. Later you will recover those money without paying taxes. Is it fair? It is unfair. You got it? So that is the reason why we have a system for this. But okay, let me summarize things for you. Guys, if you have doubts, just ask. We need to get introduced to these things because from next chapter onwards, directly I'll be talking about the respective points only. You should have the broader picture. So to be honest, this is the broader picture of your syllabus. You know what are income taxes? So income taxes are charged on self-employed income, employed income, and investments that you make. Is it a direct or indirect tax? Direct tax. Okay. Is it a capital or revenue tax? It's a revenue tax. You earn and you pay taxes. It's a revenue tax. Okay. Then corporation tax means charged on individuals or corporates. Corporates means what? Firms, business organizations. Now don't confuse it. Income tax is different. That is on individuals. Corporation or corporate tax is for businesses, business units. Right. So business units will make profits and gains. Is it direct or indirect tax? Direct tax. Why? Corporate needs to pay taxes on the income that they are making. So it is a direct tax. Corporate will feel the pain. Is it capital or revenue? Both. Because in a company, there are revenue items and capital items that a company will own. So likewise, as an individual, income tax is a revenue type for me. For individual, CGT, what is that? Capital gain tax will be my capital tax. Did you understand that? Now for a company, I told that both are there. Now you might be wondering for an individual. For individual, we are taxing it in a separate way. You got it? So capital gain tax are arising from sale of assets or gift of assets. So if you are owning something, you are owning an asset. I am owning 5 cars. So I will be classified under what type of tax? Income tax or capital gain tax? Capital gain tax, because I'm owning these 5 properties or 5 cars. Okay. Is it direct or indirect? Direct, because I will feel the pain when I pay taxes on these properties. Right. Did you understand that? Cool. What are inheritance tax? Any transfers as a gift or by death of a person. It can be a property, it can be any valuable items. So is it a direct tax or an indirect tax? It's a direct tax, right? Because I transferred 3 of my cars to my son. So now my son have to pay taxes on that. In vain, no? So it's like, Dad, why did you give the cars? Okay. Still you need to pay the taxes for those things. So that is inherited tax. Okay. Is it a capital item or a revenue item? It's capital item because you're owning that asset. Okay, fine. Value added taxes. The taxes which are charged on the goods and services, or the taxes which are attached to something else. Is it direct or indirect? It's an indirect tax. Okay. Is it capital or revenue? You don't. Because for capital also you pay, for revenue also you will pay. You got it? Right. So national insurance contributions, NIC. So there you have something called classes. We'll study when we learn that particular chapter, because if I introduce that, it will be too much on your head. Okay, so we'll go one by one. But technically, NIC is a direct revenue. I'll explain what is NIC, national insurance contribution. Is it a revenue item or a capital item? It's a revenue item, because you in government is taking your money and investing in sources and giving you returns, interest. So it's a revenue coming in. It's not something that you owned. Okay, right. Up to this, any doubts? I know it is a little bit boring. The first chapter is not technically, it will sound a little boring. So try to be up from next chapters. Of course, you need to work. Okay, because there you need to spend time on calculations, understand the calculations, read the questions. Certain questions won't sound direct to us. Okay, right. Tax years for personal taxes. What are personal taxes? Can I call it as income tax? As personal tax? Guys, can I call income tax as personal tax? Yes. CGT, what is CGT? Capital gain tax. NIC? NIC means what? National insurance contributions. So all these are your personal taxes. So you are calculating your taxes. Now you need to pay taxes not every day. Personal taxes are charged on an annual basis. Every year you need to submit an income tax return, a capital gain tax return, an NIC returns. You need to submit to whom? To the relevant government authority. In our case, it is HMRC. I will introduce HMRC later. In UK, you call it as HMRC. The tax authority is HMRC. Okay. So what is the tax year? 6th of April to 5th of April, which means 6th of April 2023 to 5th of April 2024 is your complete 1 year. Did you understand that? So you are in the period of Finance Act 2023. So what is our related period? The tax year 2023 and 24 is our related period. So which means 6th of April 2023 to 5th of April 2024. So any income that you earn during this period needs to be submitted. You got it? Did you understand that? So like you prepare your accounts for 12 months, right? Tax returns are also prepared on 12-month period, a calendar period. Did you understand that? But you have a specific period for this. You got it? When you start a business, you can start anywhere in the calendar. No? You got it? So accounting period can be different country to country, but tax period is specified. Your tax needs to be submitted by this date. Let's assume if you are earning these incomes from January to April, from January to April, you need to calculate and submit. You got it? If it is only for April, then only for those 5 days you need to submit. Did you understand that? Right. Then you know what is IHT, right? What is IHT? Inheritance tax. IHT means what? Inheritance tax. So now you might be wondering when you should pay inheritance tax. Do you need to pay every year? If you don't have a property, how you are going to pay inheritance tax? Let's assume you are not good with your great grandparents, then they are not going to give you any properties. Can you pay taxes on that? No. Will you pay taxes on them? No. So this is assessed when a chargeable lifetime gift is made, or when a person dies. But the tax year is still relevant to 6th of April to 5th of April of the following year. Okay. Then there are some exemptions that you will learn under inheritance tax. That is our last chapter. Those exemptions, no, yet again I will talk about inheritance tax later. Now at this point, I'm just introducing the tax years. When are these tax return needs to be submitted to the authority? So when it comes to income tax, CGT and NIC, the tax period is going to be when? 6th of April to 5th of April the following year. April to April cycle. It's not January to December. Your 12 months is falling 6th of April to 5th of April the other. Don't ask me why did they choose those dates. Those dates are given by the government. Even I can't change it. Okay, right. Then inherited tax, it is assessed only when it is there. Only if you have inherited tax that you need to pay. You got it? If you have a gain, if you have a property, if you have any transfers, then you need to pay. For that also the return, now let's assume, if your dad is giving the car today, means are you falling into 2023-24 financial tax year or not? Are you falling to 2023-24 tax year or not? I'm falling. What is the date today? 29th of September. So 29th of September, now see, it is a very practical exam. Okay, so income, the property that I'm earning today, then this year I need to prepare an inherited tax, IHT tax return. And I need to tell that I have earned these properties or I have received these properties from my dad. Then you need to contribute the taxation for that. Exemptions and things we'll learn it later. But till you need to file an IHT return. If you fail to publish, can government track you? How? From your dad's returns they will tax. Now dad will file saying that he's owning only 2 properties. No, government will do an audit. Last year you had 5 cars. This year you have submitting only 2 cars. What happened to those 3? They will say on the sales, revenue income. No, there's no any capital sales happened. Then they will ask what happened from your dad. Now your dad will say, no, I have transferred to my son. Then they will ask, where is your inherited return? You will get caught if you have not submitted. So you can't escape from the system. Nice system, right? Now, there are some loopholes. Later you need to find it and say it to me. That's why every year they are correct. Okay, but did you understand what is inherited tax now? So first you need to get yourself comfortable with these terms. Right? And you know the tax year also. What is the tax year we are learning? Financial year 2023-24. What are the dates? 6th of April to 5th of April. Any transaction between these dates will be considered under the Finance Act year 23 and 24. Okay. Right. Then accounting periods for corporation. How many years? 12 months. I didn't get you. Yeah, that I'll explain. This is tax period. Okay. This is accounting periods for corporation tax. For what? Companies. Accounting for corporation tax. This is for personal. So personal means income tax, CGT, NIC and IHT are your personal incomes, right? Personal tax on personal things. But company is not personal. It's a separate entity. So their financial year runs from 1st of April to 31st March. Tax year is different. Financial year is different. I'll tell you what. Now you might be confusing, sir. Should I pay taxes? Guys, listen. Accounting for companies, in other terms. So you are the financial period in UK. This is financial period. Okay, the financial period in UK to prepare your income statements, balance sheets, and all your financial statements in a company is starting from 1st of April to 31st March the following year, which means this is 2023, this will be 2024. Sri Lanka also the same. But the taxation period is different. Taxation period is different. Taxation period is starting from 6th of April to 5th of April. So you need to calculate the incomes between these two periods to pay taxes. Don't get confused. This is to submit your financial statements. Why? Do you know that companies needs to file their income state or financial statements with whom? Company's house, company's registrar. Which companies? Private or public? Public companies. You got it? So there is a requirement there. That's why for corporations, you need to be very careful. What is your accounting period and what is the taxation period? Calculations, we'll see how we are going to do. I'll explain how we are going to do the calculations when I'm taking you through corporation tax. At the moment, don't confuse it. For the moment, you understand the tax year is 5th of April to 6th of April of the following year. Accounting period is 1st of April to 31st March. That's all. Don't confuse anything else. Other respective things, we'll learn it from the other chapters. Because if I give you all those instructions now, you'll get more confused. Got it? Does it make sense? Right. So what is VAT? Value added tax. Now see, for VAT, technically every quarter you need to file a return. Every quarter. So every 3 months you file a return. So if you take January, February, March is a quarter. April, May, June is a quarter. So every quarter you need to file your returns, your VAT returns, every quarter. Yet again, the implications, the exemptions and criteria we will learn under VAT. For time being, remember, you need to pay it every 3 months. Every 3 months, right? So we learn 3 tax periods now. For personal taxes, what are the items comes under personal taxes? Income tax will fall under personal tax. Capital gain tax will fall under personal tax. NIC, national insurance contributions, will fall under personal tax. Inheritance tax will fall under personal tax. For these things, the tax period is on 6th of April to 5th of April following year. Understood? So those are your personal items which are being taxed. Then corporates. Corporates are taxed separately, right? Corporate is not an individual, it's a separate individual. Okay, it's a separate artificial body. For corporate, you need to remember there is a tax year as well as accounting year. So accounting year is falling between 1st of April to 31st March. Tax year is the same. Okay. I will give you the elaborated idea about corporation tax when we learn corporation tax. Then finally, value added tax. So for value added tax, you need to file a return every 3 months or every quarter. General idea. So what we are going to learn throughout this syllabus is how to prepare this income tax return, how to prepare this corporation tax return, and how to prepare this value added tax return. We have a pro forma, then we are going to see how we are going to calculate it. Understood? Another important thing. Pay attention to this part. Very important. Tax status. Let's see what is this tax status is talking about. So they are telling that individual or corporate taxpayer is a fundamental deciding whether or not that person or company falls within UK tax or not. What they're trying to say is, are you a UK resident or not? Got it? So who will pay taxes in UK? UK residents. Non-UK residents, will they pay taxes? You can't directly say no because you have some criteria. For an example, my family is living in UK. Okay. So they are earning in UK. They are living in UK. They are spending in UK. Let's assume only once in a year they come to Sri Lanka and going back. Now I'm just asking you, from UK's point of view, think that you are the UK government. Should I tax this person? I should tax this person, right? If I don't tax this person, even Sri Lanka government will miss to tax this person. You got it? So now there is a criteria to understand the residents. Who is a tax resident? You got it? So we are going to see the tie-ups now. How an individual will be considered as a tax resident and whether he needs to pay taxes or not. We'll see the criteria. Did you understand that? Now they are telling that an individual who is a UK resident is taxed on worldwide income. So if you are born in UK and if you have a UK passport, if you have a UK citizenship, from UK, if you are operating any businesses around the world, still if you are a UK resident, you need to pay income tax on that. Did you understand that? Government have the rights to charge taxes on you. Does government have rights to charge taxes on you? Yes. If you are a UK resident, then of course, yes. The income that you earn within the territory of UK plus outside UK. You got it? So government can charge taxes on both the incomes that you're earning. If you are a UK resident, 100%. Did you understand that? Right. A non-UK resident is liable for any income that he is making in UK only. I told you my family is living in UK, and if we are making their revenue in UK means then whatever the revenue that they are making there, they need to tax. Our government have the right to tax them. A general idea. Is it fair? It's a good ruling, right? Otherwise it will be complex. Right. Then they're telling that for companies, now this is for individuals, right? Now we are going to talk about companies. Now what happens if it is a company? For company, the corporation tax is determined by reference to the residence of that company. So where is your company registered? If you are registered in Sri Lanka and operating the business in UK, then you are not falling into UK's category of taxation. You need to pay taxes in Sri Lanka. If you are registered in UK and operating in Europe, then you need to pay taxes to the UK government. Did you understand that? So it depends on the registration. That's what they are trying to say. See, company, for the purposes of corporation tax, it is determined by the reference to the residence of the company. Where is the mother company? Technically. Okay. But individuals, yet again, the local citizens of UK, they will earn within UK as well as outside UK. Can I tax on both incomes for a local resident? Let's assume you are a UK resident. You are earning money from the country as well as some foreign operations. And can UK government tax on both the revenues you are making? Yes. If you are a UK citizen, yes. If you are a UK citizen. But let's assume if you are a foreign citizen, then only the income that you're earning in UK will be taxed, not the money that you're making in Sri Lanka. You got it? That is really important to understand, okay? Because the next thing, now you need to identify who is a resident of a country to pay taxes. Okay, so now you need to test yourself and see, are you a resident to pay taxes. Are you qualified to pay taxes? So what are the qualifications that you need to meet in order to pay taxes is what we are going to look through this. An individual is subjected to a statutory residence test. What test? A statutory resident test. So to assess this statutory resident test, you have some criterias. Okay. So one of the criteria is automatically treated as not resident of the country. You're treated as not resident. We'll see how. The next thing is automatically treated as UK resident. Are you automatically becoming a UK resident or not? Then subject to review of ties to the UK, rather like badges of residence. Now, when it comes to ties, let's see what are the ties. Ties means the relationship you have with the country. Okay. So to decide whether you are a tax resident or not, the first criteria, they will test whether you are a UK resident or not. Resident or non-resident. First two things. Third criteria is depending on the ties that you're having. All right. To know what are those ties, the relationships that you have with the country, we'll be discussing the next slide. But before that, see, the application of the sufficient ties test depends on whether or not the person has been resident in the UK for any previous 3 tax years. For any previous 3 tax years, the 5 ties to be considered. So if you are in UK for previous 3 years, okay, then there are certain relationships that needs to be considered. Let's see how we are going to do this test. Now see, to determine the residency, okay, so you are trying to identify whether you need to pay taxes or not. Only if you become UK resident, only you need to pay taxes. Now for an example, I am going to UK for a visit. I'm staying there for 2 months. How many days? 60 days. Now you need to check, should I pay in taxes or not in UK? Value-added tax is different. Should I pay income tax or not? Should I pay corporation tax or not? Should I pay inheritance tax or not? You are eligible to pay taxes only if you are a resident. Only if you qualify yourself as a resident, then you are subjected to a tax return. Okay, think from government perspective. So residence can be established using the following table. Now see, you are spending less than 16 days in UK. If you are previously being a resident and if you are staying only 16 days in UK, are you a resident of that country? No. Automatically, if anyone who is staying less than 16 days in a country is not a resident at all. Then not previously resident guys also will be not a resident. For an example, I have been visiting UK. I'm a Sri Lankan citizen. Okay. But I'm visiting UK for 2 weeks, a trip. It's less than 16 days, right? So technically, I'm not previous resident of the country and I'm automatically not qualifying to be taxed, not a tax resident. Then the first column saying that you are previously resident, which means you are living in UK, you have the citizenship in UK, but you are not spending most of your time in UK. You are spending in Sri Lanka. Only for 2 weeks you are going to UK, but you hold a citizenship in UK. Now, are you a tax resident? Are you qualifying to pay tax? Now, don't think your personal residency status and the tax residency status as the same. Personal residency status and the tax residency status are different. What we are trying to achieve from this chart, we are trying to identify, are you qualified as a UK resident to pay taxes? So if you are staying less than 16 days in both the instances, you are not qualified to pay taxes. So can government ask taxes from you? No, they can't. Did you understand? So if you are staying between 16 to 45 days, how many days? 16 to 45 days. Resident, you are being resident if 4 UK ties are achieved or qualified. Now, when I say ties, you might be wondering what are those ties. So 4 means at least out of these 5, you need to qualify for 4 ties. What are ties? Is your family is living there. Family tie. So let's assume your UK resident spouse or partner or child under 18 is in UK. That is one tie. Okay. Second tie is accommodation. Where do you live? You have a place in UK at least for 91 days. Okay. Then that is another tie. I'll explain those ties later again. And do you have a work tie? Do you have a 90-day tie? Let's see what are those 90-day tie. And country tie. So there are 5 ties. So when it comes to consider you as a tax resident, should you pay taxes or not? And if you are staying in UK more than 16 days and less than 45 days, if you have been previously resident in the country and you are visiting to UK only for, let's assume 45 days. Okay. Only for 1.5 months you are coming to the country. Now the next question is, should you pay taxes or not? Isn't it? Are you supposed to pay taxes or not is the next question. So government tells you, you will qualify to pay taxes if you are having 4 ties, 4 relationships. What are those ties? There are 5 ties. Work tie, 90 days tie, then these ties I'm talking about. A family tie, an accommodation, a country tie. Okay, which means it ensures your existence there. Let's assume you might be working in some other country. Let's say you're working in Spain, but your family is living in UK. Then your permanent residency is in UK, isn't it? Then your family tie-up is in UK, but your country tie-up is also in UK. Now see, 3 things qualify. Now you need to say 90-day tie-up and work tie-up. Work tie-up is not obviously not there, right? Because work tie-up, you're working outside UK, you're working in Spain, so that tie-up is not qualified. So as of now, being a UK resident, 3 tie-ups, I'm qualified. And I'm staying only 45 days in UK. Am I qualified to pay taxes? No. I'm not qualified to pay taxes. However, 90-day tie-up, having spent more than 90 days in the UK, either of the previous 2 tax years. So if you have stayed in UK for previous 2 tax years, more than 90 days, which means last year I have stayed 45 days. This year I'm staying for 45 days. Means am I qualifying for tie-up now? Yes. The 4th tie is also applicable for me. Then you will be treated as a resident who needs to pay taxes. Because I know this is little confusing, but we need to understand. Very simple thing is, if it is less than 16 days, you need to assess whether he is a citizen of UK or not. Not means a foreigner. Citizen means the UK born person. So now he can work anywhere, right? Now for an example, let's assume I'm born in Sri Lanka, but I'm raised up in another country. Means should I pay taxes in Sri Lanka? No, right? It is unfair, isn't it? I need to pay taxes to that government, not this government, isn't it? So now they have some regulations, criteria to assess this. So if you are a UK resident and if you are staying only for 45 days in UK, then only if you qualify for 4 relationships or tie-ups, then you need to pay taxes. If not, no. Did you understand that? In a foreigner situation, Even if you are staying for 45 days, should you pay? Now let's assume I'm going to UK for 45 days. You're going to UK to stay for 45 days. Should I pay taxes? Am I qualifying for taxes? No, I'm not. Did you understand that? If I'm going for stay with my parents for 1.5 months in UK, okay, I'm a foreign resident in terms of UK law, right? So should I pay taxes? Should I pay? No. Did you understand that? Right. Next ruling is from 46 days to 90 days. Number of days, okay, but we are learning is number of days. If I'm staying in UK less than 90 days, then what is the situation? If you are a previous resident and you are going to your country for 90 days, 90 days means how many months? 3 months, a vacation. Okay, so let's assume I'm going to UK for 3 months, then you will be qualified to pay taxes if you satisfy 3 types. It can be any types. Technically, you have 5 types to assess. On those assessment, you need to qualify for how many types? 3 types if you are a UK resident. If you fulfill that criteria, then you need to pay taxes. Are you all getting me? Right. Good. Then, if you are a foreign resident, if I'm going to UK, I'm not a UK resident, right? I'm a Sri Lankan resident. I need to satisfy 4 types if I'm staying less than 90 days. Did you understand that? So this column is for the UK guys. This is for foreigners. Okay. So I'm a foreigner. I'm staying in UK for 90 days. Means that I need to satisfy 4 things. Now let's assume I'm going for a vacation for 3 months to stay with my family. Then, if government says, oh, you are staying 90 days, you need to pay taxes, means, is it fair or unfair? Unfair, right? Now government will tell, okay, let me check whether you need to pay taxes or not. So now they will see my accommodation type. Is my accommodation in UK? No, my accommodation is in where? In Sri Lanka. Do I have a family tie? I might qualify for that if my parents are or my spouse or anyone. Let's see the definition for those ties later. Then they will say my work tie. Then 90 days tie. No, I'm qualifying for 90 days tie because I'm staying here for 90 days. And then when they assess all these things, if I'm just qualifying for any of the 4 out of 5, means I am supposed to pay taxes in UK. If I qualify for 3 things, should I pay taxes in UK? As a foreign resident who is staying in UK for 90 days? No, I'm not. So that you need to judge from the scenario. That is the challenge you are going to face in the exams. You got it? Because you need to know these judgments and decisions to make. Are you getting me? Right. Now let's assume you are staying in the UK more than 90 days. You are staying in UK more than 90 days up until 120 days, roughly 4 months, isn't it? So if you are staying for 4 months, if you were being a UK resident previously, so 8 months you stay elsewhere, 4 months you come to your country. You got it? So if you are staying 4 months in your country, then you need to check, are you satisfying for 2 types? Because can you remember, UK residents needs to pay taxes on the income that they are earning within the country as well as outside of the country. So to be more fair to that situation, they are telling that, okay, you are staying in the country for 4 months, okay, and you rest of your 8 months is spent elsewhere. If you are qualifying to pay taxes or not will be assessed based on the types. Okay, so if you are staying less than 120 days and if you qualify for 2 types, then you need to pay taxes here. To whom? A UK resident. But who is not a UK resident, he needs to satisfy UK ties or more. So let's say I'm going for 4 months there. Still, I need to show 3 relationships that I'm existing in that country or more than that. Then only I will be qualified to pay taxes in UK. Now I can't unnecessarily go there and pay the government in UK, right? Then is it a promotional technique for foreigners? Will tourists come into your country? Did you understand? So to be very careful. But people come with different motives, right? Tourism, business purpose, freelancing purpose, or many other purposes can be there, right? Then if it is between 121 days and less than 182 days, if you are a previous UK resident, you need to have only one tie-up. So if you prove one tie-up, you are qualifying to pay taxes. Then here you need to have 2 UK ties or more if you are a not foreigner. So if you are staying for 182 days. So to understand this part, now see, if you are staying more than 183 days, 183 days or more, 183 days means what? How many months? 6 months or more, right? 180, more than 6 months. So if you're staying around 183 days, then automatically you need to pay taxes, even if you are a foreigner or even if you are a resident of the same country. Should you prove any tie-ups there? No. So now the tie-ups will be considered only up to 182 days. Okay. Now you have 2 categories: the citizen of the country, the foreigner. So if you are staying within 16 to 45 days, if you are staying less than 45 days, then you should know how many tie-ups that you need to meet as a citizen and as a foreigner. That is the challenge that you need to face in questions. Okay. So now you need to practice some questions, isn't it? Right. So when it comes to the next thing, now we'll learn about the tie-ups and we'll do some questions answer. Okay. Is it tested? Yes. Okay. So what is this family tie? The relationship. Okay. It can be a UK resident spouse. A family tie-up means you need to ensure that your spouse is from UK, is a UK resident, or your partner is in UK, or your child is in UK. So those are the 3 things that you need to satisfy to show a family tie-up. Okay. Then accommodation tie-up means a place available to live in the UK at least 91 days. How many days? 91 days. So do you have a place to stay for 3 months? More than 3 months, right? 91 days. This can include using the home of a close relative. So this can be included using the home of a close relative. Even if I go and stay with my relations also, it will be counted. Will it be counted? Yes. Then work type. Substantive work in the UK, which is 40 or more days at any time in the tax year. So if you have stayed to work 40 days or more, then that work tie-up is also considered. Let's assume you're going for a travel. Your head office is in UK. So you are going for 2 months for a training or some business purpose. So now this work tie-up is calculated based on the number of days that you are staying in UK at any time in the tax year. So first month you visit for 10 days. Let's assume 6th of April 2023. From that date you visited 10 days. Then again you are traveling in December for another 10 days. Then how many days? 20 days. Now our tax year is ending in 5th of April. So then another 10 days. Now are you qualifying for work tie-up? No. It needs to exceed how many days? 40 or more. But you have visited only for 30 days. Then you are not qualifying for work tie-up. Then let's see what is this 90-day tie-up. So having spent more than 90 days in UK, either of the previous 2 tax years. Okay. So if we have stayed in UK for 90 days in last 2 years, then you are qualifying for this 90-day tie-up. Then country tie-up. Now see, you can't memorize these things, but you need to understand these laws by practicing questions. Okay, because when you practice these questions only, it will increase your confusion and the complexity. Okay, spending more days in UK than in any other country in the tax year. So this tie is only relevant to a person who is UK resident. So country type is relevant to whom? Not a foreigner. It is related to whom? The UK resident of any of 3 previous years, that if it is ignored for persons arriving in the UK. So this tie-up is not related to a foreigner. Country tie-up is only related to a citizen who is in UK, right? So before I move to the next slide, let's understand some questions. We'll see how a question is being tested on this area. Now see, the example 1. Anna is not previously resident in the UK. So she is a foreigner. Was spent in the UK for 42 days. How many days she is spending? 42 days in UK. So she is staying in UK for 42 days during the tax year 2023 and 24. So now you need to test whether she qualifies to pay taxes or not. Let's assume you are the government officer. So let's assume you are Anna and you are staying in UK for 42 days, but you are not a resident of the country. But are you qualifying for tax purposes or not? So in this instance, she will be automatically be treated as not resident in the UK. Of course, right? You are a foreigner. Now you need to remember that chart. So she is staying less than 45 days, the second slab. Okay. And she's staying less than 46 days and she was not previously resident. So now say in our presentation, if you are not a resident of the country, if you are staying less than 45 days, automatically you are not qualifying to pay taxes. You got it? But if you are a resident and if you are staying for 45 days, then you need to satisfy how many tie-ups? 4 ties. Yeah, less than 46 means up to 45 days. Okay. So up until 45 days will be counted. So next days are counted from 46. Okay. Then if it is 90, the next day is counted from 91. So that's how it will be taken. Okay. Did you understand that part? Did you understand that question? So you can get questions on that. Right. Going back, we'll discuss another question. No, she don't want to pay taxes. Why she don't want to pay taxes? Because she is a foreign resident who is staying in UK only for 42 days. Now she is not qualifying to pay taxes. Technically, automatically she is getting exempted for taxes. You got it? Based on the criteria that we assessed. Okay, right. Then now let's see. Now these things will be shared with you all. Okay. The next exam. Yeah, both, everything. Even that exam format and the table of contents, everything I will share. And next class I will share, there is a tax computation sheet. Okay, every working sheets and all the things that is essential, I will share it with you. So today it's an introductory stage, but these things are little important for us. We need to spend time and see new things. Now it's new for you, so we need to learn from scratch. So that's why I'm going very slow. I can't rush on these areas. Right. Now let's see what happens in the next scenario. Now see Ben. Ben spent 60 days in UK, 60 days of working. Okay. Now you need to highlight that also. In UK during the tax year 2023 and 24. While in the UK, he stayed at his family home. Did you understand that? So Ben is going to UK. Okay. So 60 days means 2 months he stayed. 60 working days he stayed. And he is accommodated by his family. Now you need to check whether Ben is qualifying for tax or not. The first thing, you need to understand whether he is a UK resident or not. That's the first criteria, right? Now see, Ben has been in UK too long to be automatically non-resident. Okay. If his UK home is the only home, he will be automatically considered as UK resident. Because based on the statement that they have given, can you tell whether he is a UK resident or not? No. But examiner is telling you, if the UK home is only home, so if his residence, if UK home is the only home, then he will be automatically considered as a UK resident. You got it? But if it is not, then there is a contradiction, isn't it? Now see, confusions in laws. Then say, now they're telling that if he has another home abroad that he uses, now they are coming to that confusion. Residence will be determined according to the number of ties and his previous status. Did you understand that? Now there are two things in this case that you need to learn. Initially they are telling that Ben stayed in UK for 60 days. Okay. And he's staying with his family. So that is where his accommodation is provided. Now the next confusion is to decide whether he is a foreigner or a UK citizen, isn't it? And they have given he is staying for 60 days. The first thing that you need to assess, how long he is being in UK. Okay. If he is staying more than 183 days, automatically he is qualified as a resident. Whether foreigner or not, you're qualifying for tax residency. But this is less than 183 days, right? How many days? 60 days. Now you need to check his tax status, isn't it? Now the next confusion comes. How to assess whether he is a foreigner or whether he is a UK resident. One thing is, if his accommodation is only in UK, which means his house is only in UK, means then he is automatically qualifying as a UK resident. Whether he qualifies for tax or not, we have to assess more. More criteria are there to assess. But to determine whether he is a resident or not, if his home is situated only in UK, then he automatically qualifies. But however, if he is having another residency, so in Sri Lanka also he is having a residency, in UK also he is having a residency. Now it will be determined according to the types, whether you are being a UK resident or a foreign resident. whether you will be considered as a UK resident or foreign resident, because the tie-ups will change, right? Because for UK residents, the tie-ups are different. For a foreign resident, the tie-ups are different. Did you understand? Right. So that is the criteria that you need to assess if that is a situation. Here we are not going to prove his status, but this is the assumption that we are going to get. Okay, right. So in the next case, see Charles. Charles was a UK resident. Charles was a UK resident and homeowner working full-time in the tax year 2021 and 2023 tax years, which means previous 2 tax years, he is considered as UK resident. In April 2023, he purchased a property abroad where he stayed most of the year. But in January to March 2024, he spent 60 days in UK. How many days? Our financial period is what? 2023 to 2024. So during this period, he is staying only in UK for how many days? 60 days. Okay. 42 days of them is what? Working days. Staying at his UK home, which he kept on, Charles had no family in the UK. Charles is not having any family in UK. Now see, yeah, but he has a house. Yeah, that's what we are going to see. Right. Now let's see how to judge Charles' residency status. Now Charles is in the UK too many days to be automatically non-resident, okay, because of his overseas home and 9-month absence. He will not automatically becomes UK resident in the tax year 2023 and 24. Did you understand that? In the 2023 and 24, he is staying only for 60 days in the country, and he is having an overseas home also, and he's having a residency here also. So now he is automatically qualifies for the tie-ups. To check the tax residency, whether he needs to pay taxes or not for the financial year 2023 and 24. Now he has 3 tie-ups. How many ties he's having? He is having the accommodation tie because his house is in UK, and work and 90 days tie-up he is qualifying, but not family or country ties, and will therefore be UK resident. Okay. So now technically what you need to understand is for how many days he is staying, was he a previous UK resident or not, is one criteria that you need to check. And is he a foreigner? You got it? Yeah. So in this case, Charles was a previous resident or not? Charles is a previous resident of UK or not? He is a previous resident. Then how many days he is staying for? 60 days. So he is falling into 46 to 90 days in our financial year. You got it? So he needs to fulfill 3 UK ties or more to considered as a tax resident. You got it? Did you understand that? Right. Now read this right after the break. We'll have a break and come. Yet again, you need to read this to understand. Okay. I know that it is not straightforward to understand because you need to think too many things. So now what you have to do is to get away from your confusions. You need to practice more questions. So when you're practicing more questions, you will understand the flow, how to apply the tests. If it is a UK resident and if it's a foreign resident, and how you need to assess the number of days, and how you need to calculate the tie-ups and confirm that he needs to pay taxes. Did you understand that? So I will provide more activities next week on this part. So this week when you go home, you need to revise and try to understand these definitions again. Did you understand that? Otherwise we will forget. Because if I ask the same questions in January, obviously we'll forget this, isn't it? So we need to have a regular practice of questions. It's very important. Understood? Okay, let's go for a break and come. So far, how tax is going? Little nasty, no? No worries, no worries. Okay, we'll meet after a break.